Now, it's about that time of day again. My name is Joseph. Monday evening, November 27th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish and trying to retest today's low, but we're sitting at a key support level on the chart right now, telling me to wait for a retracement back up to resistance for selling opportunities back down tomorrow. The S&P is bullish with a spike in channel pattern, telling me to focus on buying down in the battle zone tomorrow morning, stay away from that big round number, and focus on those nice deep pullbacks tomorrow to avoid buying high. The Nasdaq is also bullish with a spike in range pattern tonight. That tells me to focus on failures using the 2-try rule down below the range tomorrow morning. Don't forget about gold. Gold is bullish, but the moving average is flat, and a recent failure to retest today's high is quickly telling me to trade this like a range tomorrow. So my plan is to focus on failures below the range for a target going back up to retest the high. And of course, last but not least tonight, the euro. The euro is bearish and trying to reverse the holiday bull rally from last week, but a recent collapse through major support levels tells me we're going back lower, looking for a trap high up in that battle zone for selling opportunities tomorrow morning. Boy, I got a great newsletter in store for you gals and gals tonight. Great to be back here after a little bit of extended Thanksgiving Day break. Hope you guys had a great holiday. Hope we're back full steam ahead here this week. I want to remind you though, before we jump into our charts tonight though, I do want to remind you to make sure you subscribe to this YouTube channel if you haven't done so already, and make sure you get notified every time I post a video. And if you really want to stay in tune with what's going on here at School of Trade, make sure you join that mailing list right over here on the left-hand side of our website. If you're on our YouTube channel right now, I got a bunch of links in the description of that YouTube video. Follow that link over here to our blog at sidewaysmarkets.com. Join the newsletter in the upper left-hand corner. Don't forget, you can follow me on social media, Stock Twitch, Twitter, Facebook, LinkedIn. I'm always posting important charts, links, and updates throughout the week there. Speaking of charts, don't forget, you can download all the charts in tonight's video and have them on your computer for tomorrow. Anytime you need more information about each individual chart that I'm using tonight, you can follow that link below the video on the blog at Sideways Markets. And don't forget to grab your free pass. If you're not a member here at School of Trade, what are you waiting for? Grab that free pass, upper right-hand corner. Come out and join me as a guest in the trade room. Everyone loves the free pass. They love joining me in the trade room. Member or not, right? I want to make sure you guys remember, if you're not a member here at School of Trade, grab that free pass, come out and join me, learn all about our trading strategies and what it feels like to be a client in our trade room every day by grabbing that free pass. And if you have any questions on the way, any questions, hit me up on live support right on the right-hand side of the website. I'm always there to help you guys out, answer all your questions along the way. All right, guys, let's jump right in. A lot to cover here tonight on this newsletter. Busy week ahead of us. We're going into the end of the month, and anytime I talk about the end of the month, we always start talking about a couple things: prior month levels and increased volatility. So as we start looking at the end of the month, which is this Thursday, November 30th, we start thinking about those prior month open, high, low, close levels, right? We always talk about that at the end of the week. We start watching last week's levels. At the end of the month, we start watching last month's levels, right? So prior month open, high, low, close levels are on our radar here. We got a couple of them we're watching here today, and we'll see if we get those into, or at least on our radar, right, as the week develops here. And then also, too, don't forget, we usually get a little bit of an uptick in volatility as we get closer to the end of the month as well. So we're expecting that as we get later in this week. Now, I'm not sure how we may see that volatility kind of snuffed out a little bit here this week, because Thursday this week really is a pretty big day. First of all, in the overnight session on Thursday, we've got the whole OPEC meeting. Now, recently, we've heard rumors that the OPEC members, and of course, you know, Russia's not an OPEC member, Russia and OPEC colluding right now to extend that production cut that they issued earlier this year. This isn't anything new, right? Same production cut, but we're hearing headlines right now that we're probably going to see definitive kind of confirmation on Thursday morning that they have kind of kicked that can down the road. So OPEC on Thursday morning, that will likely lead to, could be either a very busy day for oil traders on Thursday, or it could be a relatively quiet day. You know, like I said, we get that monthly OPEC report, right? And again, we're expecting to hear news about that production cut. So Thursday we'll hear from OPEC. Thursday is also tax day here in the U.S. Well, not tax day, but they're going to be voting for, right, this new tax plan, right, coming out of the U.S. So, that might lead into, again, the end of month volatility might get a little bit of might be snuffed out a little bit, for example, on Wednesday ahead of that tax vote on Thursday. So normally, end of the month, we expect to see quite a bit of volatility, but you know what? Leading into it, Wednesday leading into Thursday, we may not see as much volatility because of the OPEC meeting, right? Because of the tax plan, et cetera, et cetera. We're also going to hear on Wednesday, we're going to hear from Yellen at 10 o'clock Eastern time. They haven't added that to the calendar yet. One of Janet Yellen's last speeches, one of her last testimonies will be on Wednesday morning at 10 a.m. Tomorrow afternoon, you'll notice it's not on the typical calendars. Tomorrow afternoon, we get the new Fed chairperson being sworn in or testifying or something tomorrow afternoon, right? So tomorrow we'll see Jerome Powell, right, in front of the group there in Washington, D.C., getting the tough questions, right, that of course everybody wants to ask. So a lot here, right? So new Fed chair tomorrow afternoon, Janet Yellen on Wednesday morning, right? Thursday, all hell breaks loose from OPEC, right? And of course we got the tax vote, right, in the afternoon, and then of course you got Friday the 1st, right? First day of the week. That usually means we have our non-farm payroll numbers. I don't see it mentioned on this list right now. Maybe they've decided to push that back to the 8th, which would be the Friday after, but we'll see how that looks as we go later into the week. I don't see that non-farm number listed right now, so that might be pushed back right towards the end of the week. As you can see, quite a busy week. I think the big stuff, though, is going to be coming on Thursday. I don't think you're going to see too much reaction tomorrow afternoon to that Fed speaker or the new Fed chairperson. I don't think you'll see much, right, regarding Janet Yellen. I would expect, though, Wednesday afternoon to be a little bit slower and sluggish, right, as we go into that tax day on Thursday, into that OPEC day, right, on Thursday, and then really your guess is as good as mine, right, what Thursday will look like once all that stuff starts hitting the fan. So that's a good overview of what we're dealing with here this week. By the way, if you follow me on social media, I put a list of all these things out earlier this morning, right? So if you're on my Facebook feed, if you follow me on Facebook or Twitter, right, you got that link sent out earlier this morning for all of what I discussed earlier here today. Now tomorrow is Tuesday, and you'll notice we got a little bit of news tomorrow, right? Get the international trade tomorrow morning at 8:30 a.m. Eastern time. So we definitely want to keep that in the back of our mind. We get some minor news here at 9 o'clock and 10 o'clock. I'm not going to worry too much about that. 10 o'clock is always a hot button for me in our trade room. We call it the 10 o'clock shock, right, the top of the hour. So those are definitely going to be the hot times tomorrow morning. 8:30 a.m., get the big news, international trading goods. And again, I'm not really worried about consumer confidence number tomorrow at 10 a.m., but 10 a.m. Eastern time is always going to be an important time, right, of the morning. And the most important time tomorrow morning is 8 o'clock Eastern time. That's when I plan on seeing you, along with all my other advanced members, right, in our trade room, and we're going to execute the strategy together. Speaking of the strategy, now that we got that out of the way, let's grab some charts, shall we? Again, a lot coming this week, so we may have to be flexible this week. We may get a little bit of a sluggishness as we get later into that week where, again, end of the month, we should get some more volatility, but we get a bunch of news here as we get closer to that Thursday and Friday session. I'm going to go crude oil, S&P, Nasdaq, gold. We'll wrap up tonight on the euro. Starting off tonight with the black gold, the Texas T, right? The crude oil futures. Crude is bearish and trying to retest today's low, but we're trading in an area that I would expect buyers to be watching. So I'm going to resist the temptation to chase this move lower and look for more reliable selling opportunities up at resistance levels waiting overhead. Now, if price keeps pushing lower, I don't want to sell too low, so my plan will shift from selling high, right, at resistance to selling with traps on the way down to support. I think this is pretty easy to see, right? The bears had a nice strong move down. Obviously here, bears were in very much well under control, right, of this market for pretty much the entire session. We see a short covering rally after a measured move, and this is a good example. Buyers had a great opportunity on a silver platter. All they had to do was hold that pullback right there, and what did they do? Did they hold it? Of course they didn't, right? That's wrong. It looks like some poor sap bought just above the high of that green candle, and then the bottom just gets pulled out from underneath it. Strong move up, pulls back to the moving average. Buyers, this was your chance, and they blew it. So buyers definitely missing their opportunity here, right, to take control. Bears still have control. Now, anytime we see a strong move in one direction, like we saw back right earlier on today, we know to expect a two-legged pullback up to a level of resistance and a retest of that low. This is one of the basic fundamentals of a strategy that I teach here at School of Trade. You can learn more about that strategy on our free trial. If you're on YouTube, find the link in the description of that YouTube video. Now, we know where they're trying to go. The objective, right, mission, if you choose to accept it, is to go down to that 57.55. Now, before I just start blindly selling, one of the things on my cheat sheet that we use every day in our trade room is I always look left and I think, if I'm going to be a seller, well, before I sell, where would I be a buyer? If I was going to be a buyer, where would I be a buyer, right? If I want to be a seller, put myself in the shoes of the opposite side of that market, which in this case will be the buyers. We look left and we can see that little trap here, and you'll notice that little candlestick, right, that finished up today's session. Buyers are definitely trying to step in, and they're trying to buy low here. So I don't want to chase this move lower, right? The best place to sell was this M pattern, right? This failure pattern, right? Coming off that high earlier. If you're in off the short there, your target's pretty simple. It's back down to retest that low. I want nothing to do with selling down here at this point. So we zoom in a little bit closer on this now, get a little more intimate with this. I'm going to draw that trend line coming down overhead. I've got this old trend line coming up. This could end up becoming, right, our best friend tomorrow in all reality, right, off of that trend line. But really what I'm looking for is I'm looking to get short somewhere up in and around this area here, right, for tomorrow. I couldn't tell you exactly where it will be because I need to see what the setup looks like and find the proper trigger, but I'm looking for a move up to resistance because right now, let's face it, right, I'm down at an area of support and I want to sell in a bear market, but I want to sell at resistance. I don't want to sell at support. You know, it's those simple things that keep you out of trouble. Okay, sell at resistance, don't sell at support. If I sell now, right, I'm selling into support. So we know where I want to get short here, right? Failure, pullbacks on the way back down, right? Using this level of resistance, maybe we get a nice big strong move up and we can kind of piggyback off of that trend line as resistance there as well. Maybe we get lucky on that tomorrow. Hopefully we do, and we can get back down again. What if price goes lower, right? What if it keeps going lower here? If it keeps going lower, my job is to keep looking to sell at resistance. I'm going to still try to use this trend line, but now I can get a little bit more aggressive looking at traps, looking left, finding those prior swings, right, and trying to get up above those prior swings so I can look for selling opportunities at resistance rather than selling into support. Continue following that plan as we go lower. Now, some larger targets here, right? It's pretty easy to see that if you kind of connect these dots, right? Kind of connect these dots here from that high, we get a big measured move target waiting for us down at 56.87. But remember, don't get too aggressive on this until we can get through that 57.55. Bears trying to go down back to that 55 area. From there, then we can look for that continuation down, right, to that bigger measured move. If we do get through that 55, I'll be looking for a larger channel here as well, and we'll look for that move, right, back up from there. Lots of different ways in which we can trade this market if we can get through that 55 support level, right? 55 is the objective. So now we know the plan here for the bears. But how do we turn bullish? You know, in all reality, we had that big bull run to finish up the old Turkey Day trot, right, going higher last week, right? This might have been just a pullback to allow buyers, right, to buy nice and low. The buyers would love to get back to Friday's high, but they don't have a lot of confidence right now. So how do we turn bullish? We turn bullish. We already have a strong move up. All we need now is see another strong move higher. If we start seeing the overnight session start to bubble up and we see these buyers buying above that 58.37, then we know I'm going to go out, find that new trend line, find that new channel, right? And we'll start looking for opportunities here to buy on the way up to Friday's high from there. So we got to see some strength here for the buyers, not just strength back up into the battle zone, but strength up through the battle zone if we're going to call this a bull market. And if it becomes a bull market, then we'll go looking for our own new bull channel, right? We'll look for those buying opportunities down around that low. We'll find a new set of measured moves with the big objective being up at Friday's high. Don't forget, tomorrow morning, 8 o'clock Eastern time, I will see you guys there, right? And we'll trade this, right, together. How about some S&P? The S&P is bullish with a spike in channel, but the slope of this channel, the slope of this moving average are telling me the buyers aren't too excited about buying at higher prices right now. In fact, it looks like that big round number, right, has this price kind of propped up here. But you'll notice every time we look at this chart, the first thing that stands out is every time it makes a new higher high, what happens? It gets sold right back down again. You know, as if buyers just simply don't trust the market, right, at all-time highs right now. You can definitely see every time it pulls back, the buyers are buying it. Right? It's easy to see. Every time it pulls back, the buyers are buying it. So we know the market's bullish. We know the buyers are just a little bit gun shy, right? A little bit trigger shy from buying too high right now. The most important thing on this chart is this spike in channel. Strong move up, pulls back, makes a new high. That creates our spike in channel. Now, spike in channels are pretty easy patterns, right? Find the first pullback, find the beginning of that channel, and this creates we call our battle zone. Now, I really should label both of these the battle zone, right? These are kind of both the battle zone. One's kind of the battle zone minor, right? One's kind of the battle zone major. Okay, so on and so forth. But the bottom line is I do not want to be buying high on the S&P right now. There's clear evidence on this chart that buying high is just going to get you into trouble. Okay, now it's also a bull market, so I'm not too keen on being a seller here just yet, although I could see why sellers would start to take a little nibble right up around those highs. Follow the trend. The trend will give you much more reliable results to your patterns. So what I'm looking for is anytime I see a spike in channel, I always know everybody's already in long. Looking deeper at this particular spike in channel, the slope of the moving average, the slope of the channel, doesn't give me a lot of confidence to be buying high. So let's look for areas where we can buy nice and low. Look left, find prior swings. That creates the first battle zone. Then you've got the bigger battle zone down around that 96.5 area, right? Because again, it's a spike in channel. So with that information now in hand, I now know to look for those failure patterns. Anytime I go below the moving average, I expect that sellers are going to confuse that with a trend reversal. We know that a trend reversal doesn't just move below the moving average. If it's going to reverse the trend, it's going to hold that pullback and go, right? Look what happened back here. Strong move down, pulls back to the moving average. What happened, right? Did they take it? No, they didn't. They failed, and buyers, right, tried buying it right up. So same thing. I want to see that seller failure and look for that buy back up, right? Seller failure down in that battle zone. Now, hopefully, right, unless you're already in a position long right now, hopefully we get a much deeper pullback. One try for the bears, two try for the bears. Again, that moving average will come down, right? And I'm looking for that failure up and then go from there. Couple different options, right? We can look for the failure, or we can grab the pullback after the failure. The failure pattern is oftentimes a little bit less obvious, right? Because if you're not looking for it, it can kind of sneak right past you. The pullback pattern may be a little bit more in your wheelhouse, right? Might be a little bit easier to see on your chart. The bottom line, though, is until we turn bearish, I'm looking for buying opportunities right now down at support levels, right? So buying opportunities down in that battle zone. I'd love to get an even deeper pullback right into that major battle zone as well. And again, I don't want to buy too high right now because of what I'm seeing here on the chart. So if it keeps going higher here, right, if we go higher, your job is going to be, much like on crude oil, I tried to give you some scenarios for, right, if it did pull back or if it didn't pull back, if it doesn't go down to those battle zones, now what I'm looking for is those traps, right? So very similar to what we talked about on oil, right? Just the exact opposite. We didn't see very much proof that oil wanted to go low, or we were seeing sellers the lows, just like we're not seeing much proof here on the S&P that we're seeing buyers at those highs, right? So anytime we have concerns about buying high, which we really always should, but in this one, it's compounded because we see proof, right, just recently here. Anytime we have that information, we know now, let's get this market either pull back, right? Either pull back so we can buy nice and low, or if it just if it's stingy with us and it goes higher without really a pullback, that's fine. Just make sure you focus on traps. That way you can be buying as low as possible tomorrow. Now, where's the objective? Well, the objective right now is to get back up to retest the high of that channel. It's a little bit of a pipe dream right now, but there's potential for a large measured move up there at 26.10.5. But again, right, I mean, it's a bit of a pipe dream right now based on what we've seen over the past few days here on the S&P. Everything goes back to those highs. How do we turn bearish right now? Yeah, three things, right? Strength, pullback, strength, right? I have no problem being a bear, but I'm going to have to see this market really show me strength after that pullback, right? So remember, a strong move lower isn't enough to deter these buyers. They're just going to buy it, right? You get a strong move lower, hold that pullback, and go. That'll be the only real way that the bulls stop buying and the bears can get some confidence over to the downside. Bulls want to get back to retest the high, maybe a measured move if they play their cards right tomorrow. The bears want to get, again, the bears going to take control first, and then looking for that move back down to that 89.5, which is the base of that spike and channel. Again, tomorrow morning, 8 o'clock Eastern time, I will see you guys there, and we'll trade the strategy together. How about some Nasdaq? Nasdaq is also bullish, this time a little bit different than the Emini, right? This is a spike and range pattern, which basically tells us to avoid the middle, focus on failures above the highs and below the lows, right? So no trade zone right in the middle. Buy low, sell high. The bulls have the edge right now because of that move again that we went through, the old turkey trot, right? The kind of that euphoric low volume move that we saw, right, while everyone was stuffing their faces and watching football, right, Thursday and Friday last week. So the bulls definitely have the edge, right, with this range. But the recent pullback is proof that buyers are certainly interested in buying low. They're just not too interested in buying too high right now. So my focus is avoiding the resistance levels overhead and buying with traps and seller failures down in that battle zone tomorrow morning. Anytime I see strong move up but can't keep making new higher highs, this is called a spike in range, right? That spike in range has a bull bias because of the move going higher, right? So I want to be a buyer rather than being a seller. And the key is to look for seller failures down below that low. Most breakouts in liquid markets fail, right? So when the market breaks lower, hopefully it gives a nice break lower. Bears are going to come try to sell that pullback, right? Like foolish counter trend breakout sellers will do. And I'm going to look for those foolish sellers to fail, right? So I can be a buyer going back up into that range. Now, don't get me wrong, right? Those sellers could take control if they hold that pullback and they can show me, right, some proof going lower here, right? But that's relatively rare. What usually happens is we go up, fail, and right back up. The best examples of these actually go to a new lower low, and then they get sucked back up in. Remember, you want to see continuation through that low, right? It's not just enough to see that second move go through that low. It's got to continue. Once we see that lower low start to struggle, then we know I'm looking for that move back up through that high. Now, with that said, how do we go through the high? Up, strong move up, two-legged pullback, and go from there. Imagine the moving average coming over and getting above the top of that range, right? Imagine the moving average above the top of that trading range. That's what I want to see for a strong breakout higher. So as I look at this, right, sell high, buy low, avoid the middle, right? Avoid the middle. You'll notice I am drawing in another support trend line here that may or may not come into play here for tomorrow. And much like the S&P, right, we have a bit of a pipe dream of a target here. We'll have to see the market get through that range high first, and then we can start worrying about, right, grabbing that measured move. Anytime I find myself inside the range, I always try to sit on hands and wait patiently, looking for the breakout. One try, two try, failure, and back up in. Okay, don't get spooked if it goes nice strong move. They still have to hold that pullback, right? They're still going to hold that pullback. Don't assume, right, that a move below that battle zone means the market's reversed. They still have to hold that pullback, right? Look at how strong this move down was. You would think certainly that much strength going lower, they'd be tearing this market lower down to that low. But look what happened, right? Fails and goes back into that range. That's a type of scenario that continues to happen over and over again. Bull bias into a trading range, one try, two try, and go higher from there. Then moving average up, strong breakout, two-legged pullback, little trap low, right, for that buying opportunity from there. Notice how I'm drawing this, right? Get above that range. Get that moving average up. And if you're wondering, that's going to be a strong move, you're exactly right. It's going to require some strength going higher, because a lot of times what happens is we'll break out, we'll pull back, and then we'll get sucked back down into that range, right? Don't fall for those types of breakouts, right? You want to buy into the high of that trading range, right? Breakouts are ineffective on liquid markets, right? Like the Nasdaq, most futures markets, breakouts are not going to be a very reliable strategy, right? This isn't Bitcoin, right? And this isn't penny stocks. These are real markets we're trading. So of course, there's going to be sellers waiting up top in that battle zone. You can look for that sell, one try, two try, back down in. Just be aware though, the momentum of the market moving higher will make selling, right, much less reliable than buying at this time. So now you know, look for those buying opportunities below the low for the easy ones, or through the high. Got to be some strength, right, going up through that high. Let's keep going. From the Nasdaq over here to the gold, the yellow metal is bullish and trading sideways with a spike in range pattern, or you could call this kind of a spike in triangle pattern after the buyers failed to retest today's high. And the moving average moving sideways on the chart clearly tells us that something really isn't working here for the buyers. The buyers definitely have control of this market. Let's make that very, very clear. And they'll likely try twice to retest the high. And with their first attempt already a failure, we know they have probably one more bullet left in the chamber for tomorrow, and they'll probably use that bullet at a lower price, such as that battle zone. My plan for tomorrow is pretty simple. I want to look for one more attempt for buying opportunities. I'm going to do that by using seller failures down below the low of this range, down in that battle zone area. I've got this rising support trend line coming up off that low. We got some key levels of support at 91.7 and 90.5 area, right, that really, right, line us up here for a buy going higher. So nice strong move up in today's session. Very important, not last week's session like we saw on previous charts. But you'll notice, right, this real strong move higher. They should have had no problem retesting that high. Anytime we see a strong move in one direction, we usually get a two-legged pullback and a retest of that high. You'll notice, though, it never was able to retest that high. That is a big, big deal. That means the buyers have tried once now to retest the high, and they've failed. They're probably going to try a second time. Usually it'll come at a lower price. Second time to retest that high. Now, heads up, if they can't get that second test, right, back to that high, be aware you're going to see sellers start to attack this market. We call this the two-try rule. In a bull market, buyers will try twice after a pullback to retest the high. If they don't succeed after two attempts, they'll usually start getting out of their positions quite aggressively, turning to become bears, right, and sellers will sell into it. So we got the first try going higher. We'd like to see a second try going higher. Only concern I have right now is this falling resistance trend line. Whenever you have that falling resistance, that tells me look for this to be a possible flag pattern. So now we have an area of support lining up with a rising support trend line, a prior swing. This gives me my sweet spot for tomorrow. So I want to see as we push lower here, it'll probably look like a bear market, which means I want to use the 2-try rule. 2-try rule now for the bears. Make the bears try again. If they can't, right, now we can start looking for that buy going back up, right, to retest that high. Make sure you respect this falling resistance trend line. That'll be an easy first target, and then hold the runner back up again, like I mentioned earlier, right, to retest the high. But again, as I said earlier, as we get closer back to those highs, watch closely, because a lot of times those targets, they fizzle out above that prior swing. So we could easily see something like this tomorrow, where we see a good buying opportunity off of that low, but for whatever reason, it just can't quite finish it, right? And the market just tumbles, middle to late morning tomorrow morning, right? So buying opportunities off that low, buying opportunities, again, we're trying to use this resistance trend line, pinning that down for support down here. We got some rising support coming off of that prior low. All that area now ends up becoming a great spot for us, right? A great spot for us to be a buyer here. Again, watch for a second attempt to go higher that fizzles out, right? For that 1-try, 2-try failure. If we don't get the pullback into that battle zone, right? If it goes higher here, your focus now is on traps, but don't get too aggressive up there, because again, we already saw these buyers fail to hold above that prior high once. We have reason to believe they're going to struggle to do it again. How do we turn bearish? We just saw the market fail to retest the high. This is door wide open for the bears right now. All we're going to do is jump through it. How do we turn bearish? Well, I would make sure I get through this area here, right? So what you want to watch for is I'm assuming this market will probably move lower relatively quickly as buyers get out of positions when they realize they're wrong, right? For whatever reason, they probably haven't realized it yet. But if we do pull back here, we should see it collapse pretty quickly down into that support level. This is where we're looking for those sellers to fail, and we can start looking for those buy opportunities going back up to retest the high. But if those bears can hold this move through and show us some continuation through, I have no problem calling this now a bear market. If that's the case, then we start watching this now as a bear channel, right? And now we know where that prior support now turns into resistance, and now we get a great plan to be a seller tomorrow morning. One of the characteristics of a professional trader is someone who keeps an open mind, leaves their opinions at the door, allows the market and the price action to tell them what to do next, but also at the same time is prepared for both directions, or should I say up, down, and sideways, right? Because we know right now, if it goes sideways, we're sitting here. We're not doing anything if it goes sideways, right? I want to buy high. I want to buy low. If it goes sideways, stay patient. It will develop more into a triangle. You stay patient. Failures down below that low for the buy. Again, right, just stay away from, right, the middle of that range. What a great chart there. What a great chart there on the gold. And we got another interesting scenario here wrapping up tonight on the euro. Euro is bearish after buyers failed to hold this recent pullback into the battle zone, which is now giving sellers a key chance to catch the buyers on the wrong side of the market by using traps and failures up above those prior swings up in that battle zone tomorrow. We can see that strong move higher to finish last week's holiday session, right? The old turkey trot, as I called it earlier, right? That kind of euphoric low volume move while nobody was looking, right? But the buyers are clearly rejecting the idea of prices above that prior month high as we watch that price action collapse right through what is usually a very reliable bull battle zone at the low of that spike and channel. So my plan is pretty simple, right? I think the bears have enough momentum right now to take this market lower. My plan is then to look for the selling opportunities using a bull trap up in that battle zone tomorrow. And I have to admit, right, there is a little chance that these buyers may come to the rescue. But in order for me to be a buyer right now, I'm going to need to get back above that moving average on strength and then hold a pullback, when you even consider this market, right, for a sell right now. And the biggest clue right now is this prior month high, right? We kind of, again, that kind of euphoric move higher became a spike in channel, but I'll tell you right now, whenever we see a spike in channel, we mark up that battle zone, and we usually see a lot more reaction around that battle zone. You can see they bounced off it once, twice. It just doesn't look like these buyers are too eager to be buying this dip right now. Blame it on that prior month high. So my goal is to use that prior month high kind of like a magnet. Look left. I don't want to sell low right now. What I want to do is I want to try to catch buyers waiting for it to go higher. I'm expecting that buyers will probably try to jump back in once the market goes higher. That's exactly where we want them to be. As the moving average pulls back now, I'm looking for that failure to sell back down. This happens all the time when a real strong bull trend turns bearish, right? And you still see buyers trying to buy it as it goes higher, right? You don't want to buy this market, for sure, you don't want to buy this market as it gets back above that moving average. Because if you look left here, if I'm a seller, an aggressive seller will leave their orders just hanging out here right now, just waiting to get filled. I'm not a big fan of blind limit orders, right? But if I was, that would definitely be where I'd be looking to leave those resting limit orders, right? Just above that prior level of resistance. I used to make this mistake all the time as a new trader. I'd go, right? It'd be a little bit too strong of a move lower, right? Turning more bearish than bullish. And of course, once the market jumped higher here, I would, out of excitement and frustration of missing previous trades, I try to jump in buying high right there, thinking, well, I can go back to retest the high, plenty of space there. The problem though is you're buying high in that moment. So if you do want to be a buyer, it's going to really jump up, come over, hold that pullback, and then jump from there. Show me the buyers really want to hold this. Then I'll take them seriously right now because they had their chance earlier today, and we just don't see it happening. So look for that buyer failure up inside that battle zone, and back down we go from there. I got a gap target there to get filled, prior swing. If I had to guess, though, right now, I would guess this whole cluster, you know what I'm saying, right? This whole cluster of price action here, lot of volume traded hands there. That'll easily be an area of interest, right, for those sellers. It's also the beginning of that spike in channel. Anytime a spike in channel fails, it usually collapses right back where the party began. Stay away from that prior month high. Use it as a magnet up and back down. Trying to get that move through, right? And then again, with that final target back down. Don't forget, we'll get a new bear channel. Stay focused on selling the top of that channel if we do, right? And that will give us some great reliable trades here for tomorrow. Remember, if you want to be a buyer right now, you're either going to be long right now, or you got to wait for that proof, get pushing through that battle zone, and then look for the signal from there, right? I don't trust it yet, but I'll gladly be a buyer tomorrow if we get the proper signal with the proper strength. Boy, speaking about tomorrow, don't forget to come out and join me tomorrow morning, 8 o'clock Eastern time in the trade room. If you want to grab a great free pass to join the trade room tomorrow, grab that free trial. Get a great free trial on the homepage here at schooloftrade.com. If you're on YouTube, check out the links in the description. If you're on YouTube, make sure you give us a thumbs up. Share with a friend, subscribe to the channel if you're not already, and make sure you notify, right? Change those notification settings to make sure you're always being alerted every time I post a new video, right? You want to miss those psychology lessons as well. While you're here, don't forget, check out our beginner, intermediate, and advanced classes. And please don't forget, I'm always here to help. Hit me up on live support if you have any questions, 24/7, 365. Guys and gals, great to be back here. Hope you guys had a great Thanksgiving holiday. Another big day tomorrow. I'll see you there. If not, tomorrow evening, same time, same place for our nightly newsletter on Tuesday evening. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.